In 2016, Asia Pacific is very much the land of opportunity, with its growing wealth and rapidly evolving cities. While this pace of growth may have slowed a little, JLL looks at the potential opportunities for real estate in the region. 2016 is expected to see an incremental increase in terms of transaction volumes, while investment strategies are also changing. There is a huge weight of capital hanging over the region from outside investors keen to tap into the growth of Asia. This global trend is expected to drive real estate markets again this year.
We've got some of the world's largest investors looking to increase their allocation to real estate and direct real estate, and also increasing their allocations to Asia Pacific, and really rebalancing their portfolios away from fixed income and equities. So that's driving a huge amount of transaction activity in Asia Pacific. We saw in 2014 record transaction volumes of over $120 billion. We think that this year will finish at around $125 billion, and we think increasing again here in 2016.
And as Asian wealth grows, a lot of it is staying in the region instead of finding a new home overseas. Investors are particularly attracted to the booming services sector in the region, including logistics, which is benefiting from rapidly growing consumer markets.
The key drivers are global capital that's looking for exposure into the Asian real estate markets that I talked about. And in fact, much of that capital is Asian itself. I think more than 80% of the transaction volumes in Asia Pacific are done by Asian investors. So it's a huge amount of growing wealth. It's wealth accumulation with pension funds, insurance funds and sovereign funds out of China and some of the Asian countries. So that in itself is not only impacting Asia Pacific, it's impacting all of the global property markets, and most specifically China.
China has undergone a huge transformation in recent years, and change once again is featured strongly in 2016. Among Chinese institutional investors, there is a huge potential to increase their exposure to real estate, bringing them in line with Western counterparts. This new flow of funds is expected to find its way into real estate both domestically and also globally as Chinese organizations diversify their assets.
We see the insurance company, they can invest up to their certain percentage of their asset under management into the real estate sectors. If you compare to the mature markets such as US and European countries, most of the insurance companies in those countries already invest up to 10 to 15% of their asset under management. While if you look at Chinese insurance company, most of them is only at the range of only 1 to 2%. So it's a huge room to grow.
Corporate real estate teams are being asked to be a strategic partner to the business and help with productivity gains. In Asia, competition for talent across all business sectors is intense, and real estate has been asked to play a role in this battle.
So that means that they are looking to improve sales. How can real estate help us grow our business? It's also looking at how can we attract the best talent, how can we then retain that talent, and how can we then engage with that talent, the employee engagement thereafter. And the real estate function is being asked how they can help deliver on that.
In the residential space, 2016 looks set to be a quieter year for investors after years of rampant activity. Sky-high prices in traditional property hotspots like New York and London could see them look at a whole new batch of cities.
There's lots of good stories around Manchester. Lots of broadcasting houses have put their head offices there, and pricing is much more realistic. Again, good university. Then cities like Boston, Chicago are all cities that still are considered to be undervalued, and I think we're going to definitely see more projects from those cities.
So, to sum it up, 2016 should see real estate play an increasingly important role in investment portfolios, while local and global investors continue to pour money into the region.